It has been a great 20 years for RBA. We have seen a lot of growth in the industry we regulate. When we started, we used to talk about an industry of less than 100 billion shillings. Today, we have an industry of 1.4 trillion shillings.
RBA has grown. The growth has been in terms of numbers and in terms of skills.
Also, the area of automation, because when I joined RBA, most of the process were not automated.
We had manual system. And I remember, especially during the end of the financial year, which is in June, we used to have a very big queue running all through the stairs all the way to ground floor because people are bringing manual documents. They used to bring manual documents. We have provided a system to the service providers where they can be able to log into the system and submit these documents online. So for example, the service provider don't need to come here again. What they do is at the comfort of their desk from their offices, they can be able to log into the portal. They can be able to submit template of audited account, of investment returns, and also of contribution returns, and also attach those supporting documents. And when those documents comes here, they are analyzed. So as a result of this, we have been able to enhance the service delivery.
We had one laptop which was pinned by the pillar on the 13th floor. We had only 2 floors, 13th floor and 14th floor. By that time, 14th floor was an executive office. That same computer, I don't even know whose pin we were using because it was a desktop. It was only one computer. So you could walk in, do your work, and check out. Someone else will come in and do his. So it was very interesting because we didn't quarrel, we had no issues. But over that time, now everybody has a laptop.
In those formative years, we found an organization that was very well led. The management took a bottom-up approach to management. So most of us were included in a lot of activities of establishing the organization, systems, policies that, came to be the backbone of this organization.
When we started, of course, not many people knew about the retirement benefit sector. But more importantly also, there was no institution that had been charged with the responsibility of ensuring that this particular sector needs to be regulated according to the provisions of the law. So the coming up of the Retirement Benefits Act in 1997, and of course the gazettement of the regulations in the year 2000 really brought in some sense of order in this particular industry. And so I'm very proud that with the coming in of these particular regulations and the Act has actually made it possible for people to have confidence.
We came in as a regulator, one of the new regulators. At that time, the financial sector, the key regulator was the central bank. And for the retirement benefit schemes, it was some little regulation was done by KRA in terms of tax, but there was no regulation in terms of any other aspects of the schemes.
The percentage of coverage was only 12%. In the last 20 years, it has doubled. We are now at around 22.
We've seen strong investment returns over the last 20 years, which has aided this growth. And we've seen a diversification in clients' assets under management. And over the years, the Retirement Benefits Authority have increased the scope of assets that can be invested in. And this now includes areas such as private equity and ETFs, which also allow clients to spread their risk and diversify.
We have been able to register over 1,250 schemes, which is a considerable growth for the industry. We have also registered the occupational schemes, individual pension plans, and also umbrella schemes, which covers employers without occupational schemes. We have been able to register many service providers, which includes the fund managers, custodians, administrators, and also we have been able to create an enabling regulatory framework whereby we have come up with the regulations, practice notes, guidelines to provide some framework on which the pension industry must be managed.
We've also seen a lot of progressive regulations. So, for example, we've had the new guidelines on good governance for pension schemes that were issued by the RBA a couple of years ago. We have the guidelines on treating customers fairly. Kenya is in fact one of the first countries in Africa to have an initiative for trustee training. This is called the Trustee Development Program of Kenya, TDPK, which has again done very well in terms of improving the education of trustees of retirement funds.
If you look at the milestones that RBA has gone through over the years, it is one institution which other institutions are copying. They're coming for benchmarking to see this institution, and it's basically because of the policies we have put in place, the systems which were put in place. It's an institution which runs on its own.
We have our mortgage facility, which is one of those facilities which has been a benchmark to so many institutions. They come here for benchmark to start up. CMA came here, IRA came here, SASRA came here. All these institutions, they come here to benchmark. When the government was starting theirs, SRC came here to borrow that policy and came up with the 3%. Or the authority already had this facility in place. Now, when you have a mortgage, it's a long term, and therefore you have to pay it and finish up with it. When you move from RBA, of course, you are likely to go to the market rate.
As actuaries, we play a very integral role in the design and the proper financial management of retirement funds. We also play a very important role in protecting and safeguarding the benefits of members of retirement funds. And therefore, we have a very close working relationship as the Actuarial Society of Kenya with the RBA. We engage and frequently have interactions on policy matters, on technical issues, on ways in which we can improve the retirement benefit sector. We have frequent interaction with the RBA, and indeed last year we actually had a full-day workshop between the task and the RBA to discuss industry issues.
I remember back in 2006 or so, we got ISO certification. We are one of the first public institutions to get ISO certification, and then later on we also got the new certification when it changed. I remember when we launched some of the new products, like the post-retirement medical fund. It was a very exciting time for us because it enables members of schemes to save for medical in retirement. I also remember when we brought on board other exciting things like the Trustee Development Program of Kenya, which we launched some time back, and which is a way of making sure that our trustees of our schemes are well qualified to run those schemes. I think that was also an exciting development. We're excited about the recent change for mortgage, so that members of schemes can get houses when they retire or before they retire, using what they've accumulated or part of what they've accumulated in the fund. So yes, we have had all these exciting developments, but I think perhaps the greatest joy for us is just the stability of the industry, because at the end of the day, saving for retirement is all about stability.
One of the improvements that we envisage is the uptake of the informal sector. This is clearly defined in our current strategic plan, and it is in all our KPIs for different departments, so that we are able to improve on the uptake of the informal sector, which employs a huge number of Kenyans, and which needs to start saving for retirement, which is very, very vital.
Reaching the informal sector, I think it's a very good growth for the country, and it's also very good on a personal level, because I'm able to really relate to people on that very personal level. So I've enjoyed moving to different counties, knowing different people, different cultures. And we do that because we have to go out and talk to the informal sector, because you know that for a fact that there are more people out there in informal sector who need to start saving for their pension.
The team of RBA and a big team from Kenyatta National Hospital came to Kampunji to do some kind of research on health on informal workers, those who are working within the informal setup. So when they came, they found that the ground was so much fragile, things were not moving on well, and they decided to do some work, something that I can say that was Operation Eardrop, where they help us to clean the ears of artisans, provide ear masks and so forth. They gave us a computer to see how we can arrange ourselves and organize our work. Before that, things were just being done in an awkward way. So that kind of relationship helped us a lot to organize ourselves.
Through my interactions with the Retirement Benefits Authority in their trainings, I have also interacted with very many other people, different types of people, different tribes of the country Kenya. Na nimejua mambo mingi ambao sikuwa nimejua kitambo ni ingiane na wao.
I joined RBA as a driver, and from there I've acquired quite a number of certificates, from a diploma in logistics and procurement. I also did a course in public relations and communication at diploma level. So from there I can say I've really grown in my career path.
When I joined the authority in 2005, I was first posted into the finance department, where I worked for 4 years before I was then moved to redeployed to the supervision department. At that point, the authority accorded me the opportunity to work through secondment at the Policyholder Compensation Fund, where I have worked for 10 years. And during that period, I have grown in terms of my experience. I have grown in terms of my skills by virtue of the exposure I have had in the various tasks that I have undertaken. Individually, I have been able to enhance my level of education from my tertiary levels to upscale to my master's and other professional fields as well.
RBA has been very supportive of the actuarial profession in Kenya. They've sponsored many of the activities of the Actuarial Society. The RBA has involved us in discussions and initiatives on policy matters, and they are a good employer of actuaries. They also offer internship opportunities to trainee actuaries.
I have had a lot of privilege to get promoted. I have grown in the system. Along the way, I have got opportunities to train both locally and overseas. I have been to about 14 countries now, counting. I don't mean it has stopped.
I want to thank Retirement Benefits Authority because they have also built me, and as they continue building me, kwa sababu sijaacha. I am 75 years old, but I do not believe in getting old. Miaka iko, lakini mindset yangu bado kukua mzee.
RBA is a very good employer. Of course, the benefits, we have good benefits. We have a good medical cover. They give us an opportunity to grow. For example, if you wanted to go to school, they'd give you, they'd pay for you 50% of your tuition fee. So you like pay 50% for yourself as long as you pass your exams. And I've seen if you are to do, let's say, a professional course, then they bond you for like 3 years. But then they give you an opportunity to go and study, and you'll study on your salary as well. So you don't have to, as in, quit to go. you can stay, enjoy your benefits, you can still enjoy your medical cover, and you can still enjoy part of your salary as you study abroad.
As a personal growth, RBA has really made me grow because it's been 20 years. 20 years is a bit of time. So yeah, a lot of things happen. So yes, I am happy with what we've been doing, what we've done, what I've achieved as a person, on a personal level, of course, and also professionally.
The challenges, first of all, we encountered were the level of literacy of the staff that we had. So the first thing that we had to do was to train the staff so that we can be able to use the infrastructure that we had. Other challenges we had was when you open our system from outside there, most of our service providers were resistant to use the system or to use that service. But with the time, through training and through persuasion and through talking to them and working closely with them, we have been able to overcome that challenge.
If we say that the average Kenyan changes jobs about 7 times in their working lives, and if each time we change jobs we do this, we break into our pension spot. Right? This is like going on a long distance journey and emptying the fuel tank every few years. If there's the biggest impediment to Kenyans having a better pension or a more secure income in their retirement is this tendency to break into your pension saving pot. Right? And I would say this money belongs to the older person you will become. A lot of Kenyans will say, well, I need the money. I've got more pressing priorities. I've got my home, or I've got my kids' education. And yes, all of those things are important. But if it is hard enough to make ends meet now, can we imagine how much harder it will be when you no longer have an income and you don't have any saving to fall back on?
Many thought pensions are only for those who are formally employed. So passing the message on pension to the youth has been quite a challenge. So we had to come up with messages that can resonate very well with the youth, and also messages that can be received by the mama mboga and even people in the informal sector, other informal sector like the boda boda. And through developing targeted messages, we have been able to achieve that level of sensitizations and awareness.
Setting up a retirement scheme is voluntary. So the sponsor has got to decide to set up a scheme. And we have some employers who have not yet set up schemes. So in terms of coverage, we are still at a very low level. Coverage means how many Kenyans who are of working age and are working have a form of retirement benefits arrangement. Of course, part of that is caused by the structure of the labor market in Kenya, because we have 80% of our workers in the informal sector, but it's also just employers deciding that they don't want to set up a scheme, and some of them may be even winding up schemes. Another area we are grappling with is they have set up the schemes, they've started putting in the contributions, and then either they stop or they delay the contributions. So that unremitted contributions is becoming an issue to grapple with.
Although we have 1.3 trillion in the pensions industry in Kenya, if you measure the outcomes in terms of the adequacy of benefits that Kenyans enjoy in their retirement, we're not doing that well. The average Kenyan is only replacing about 30% of their last salary, compared to the desired target of 65 to 75%. So there's more that needs to be done on improving the outcomes for members of pension funds.
One of the biggest challenges has been non-remittance of contributions. We have seen an increased level of non-remittance of contributions. As at December 2020, we have about that 3 billion, which is not remitted out of the 1.3 trillion, which is quite a substantial amount. And basically this has been maybe contributed by the public sector schemes, the county government affiliated schemes, but that is being addressed. In 3 years ago, we amended our act under section 53B, whereby RBA has been given more powers to be able to go for these sponsors who are not able to remit contribution on time, issue notice, apply penalties, Then if somebody has not been able to pay, we also go for liquidation of the schemes.
There's some things which took rather long. For example, one of the things that we have been pushing for many years was the civil service scheme to move from the previous non-contributory arrangement to a funded DC contributory scheme. Fortuitously, it has come on our 20th anniversary, because from January this year, we have seen the scheme starting off, and we have seen both the employees, the civil servants, and the employer make contributions. I believe even the February contribution now has come in. So perhaps it was waiting for our 20th anniversary, then the civil service scheme starts. Another issue which has emerged, which has concerned us, was the issue of unremitted contributions, which we saw coming up in some of the schemes, particularly universities, sugar companies, and so on, where they ran into financial problems and they were struggling to send contributions to the scheme. But we're also happy that again, government itself from the highest level has taken up that challenge. Perhaps another shock which came to us just as we are starting our celebrations for 20 years is the COVID pandemic. This impacted our schemes in a number of ways. We had people being retrenched. We had employers suspending contributions. We had employers sending staff on unpaid leave. And of course, we also had investment shocks, because where we invest in the economy was negatively affected.
We see our future being really being more agile to the needs of the board and the needs of management. The other future we see ourselves in is mainly to further automate the enterprise risk management framework.
I think there's going to be a lot more growth for RBA. Even in our current strategic plan, which is just going up for 5 years, we are targeting to move the coverage from the 20% when we started, the 22% now, to 30% by 2024. So we are wanting to bring on board more people into the pension net. And these are the people in the informal sector, because these are the people who are currently not covered, who form up actually 85% of our labor force. So I see a lot of use of technology. I see a lot of new products coming in the next few years, which will enable us to bring on board this group. Another area of excitement for us is on the investment side. I'm seeing a lot more interest in investment in alternative assets. We now allow schemes to invest in infrastructure. We allow schemes to invest in private equity. We allow schemes to invest in derivatives, REITs, all kinds of new exciting products. And I'm seeing a lot more interest in that area.
Another thing we are also looking at is what we are calling datafication. Datafication is where we are thinking of taking advantage of the volumes of data that we have by ensuring that we use big data to be able to analyze the information that we get from service providers and be able to make informed decisions based on that information.
The future of RBA is bright. The industry is stabilizing. We believe that everybody is aware there is a need for saving for retirement. Those who have been able to save for, say, over 20 years, they are looking back at their statement and saying that, yes, saving for retirement is a reality and the funds are safe. Now, what we plan to do in the future is to, as a department, we also need to do consultative meetings with the service providers, because as a RBA, our work is to create an enabling environment to support the growth of the pension industry. So we are holding meetings with the service providers, the administrators, the fund managers, and working together to ensure that the challenges faced by the members and also their own challenges in supporting us in the development of the industry, they are surmounted.
From the conduct angle, I'm very happy that to date, in the 5 years, we've managed to sensitize the trustees. Trustees are really the legal owners of schemes. If you don't convince them, you'll go nowhere. We've managed to sensitize them to understand their role with regard to the rights of the member, not just dealing with the money. So having done that, We want now to train them a bit more. Normally when you're appointed as a trustee, you've got to be trained initially, but we didn't have any follow-up training once you've been trained the first time. So we are developing new training modules and new training programs. We also want to train other what we call service providers who support the trustees. The 3 service providers, as you may have heard, we have the managers who do the investment, the custodians who hold the assets, and then we have the administrators who keep the records.
Unexpected events do happen, and the event I'm referring to, of course, is the COVID pandemic, which has overtaken the world. But I do think that this highlights the importance of taking a long-term view to saving. Such an event can happen again in the future once you're retired. And so it's very important that you have a good, strong, healthy nest egg when you do retire, so that you can get through life's ups and downs.
The first thing that I've come to realize that we have to work on is the medical cover. The medical cover is number 1 when it comes to a retiree. It's not really the pension. And then number 2 is now the pension, the liquidity comes in. You need some annuity or a drawdown. That one comes in because you need to do work on that. And I'll talk about it later because number 3 is any person who is retiring should make sure he retires without loans, because it's very difficult to pay loans when you are in retirement. So I always advise that you should make sure that you pay off all your loans before you retire. Then I also advise people to start their own small businesses, because what we found out in retirement, you have time, you should be able to do certain things to make sure to take up that time that you have.
If you invest something today with the patience, you save and steadfastly safeguard that saving. In the future, it can manifest itself into very huge investments. Pesa hakuna mingi, hakuna kidogo. Unaweza kufanya kitu na pesa hata kama ni kidogo. Bora tu your mindset iwe clear. Unajua pahali unataka kuelekea in the future.
The pension I've been receiving has been of so much help to us. I am assured that my teachers won't lose their salaries.
Nimefurahia sana mambo ya kuretire. Na hiyo pension napata every month, nafurahia.
The pension has given us a very good push up to now, because normally the growth of a school takes minimum 4 years. The 5th year, you see now the school being able to run itself. Now we can see the light at the end of the tunnel.
Na naweza kumwambia asiokope retire. Hakika nafurahia sana. Sana, sana, sana.
On this 20th year of their existence, I say congratulations.
I would like to encourage Kenyans to join a pension scheme.
I want to tell employers out there that it is important for you not only to provide for your staff during the time they are able and capable and young, but when they retire, you want to be sure that they will have a good quality of life afterwards. And one of the ways of doing this is to have a scheme set up for them.
Pension is like an insurance for the future. Whatever you have saved in pension does not disappear at the end of the year. You will actually accumulate, and at the end, when you are retiring, you will get all of it. So I ask all Kenyans of all type, of every caliber, to save for retirement.
Mtu asione kama hiyo miaka umebaki ni mingi, si mingi. Uanze maendeleo yako wakati uliajiriwa hivi, uanzie hapo mpaka uje retire. Ujikakamue ukiwa kazini ili usije kuretire bila kufanya kitu hata kidogo.
Ukipata shilingi 2, kula moja, bakisha moja. Na ile umebakisha uinvest wisely. Na lazima uwe mvumilivu, kwa sababu pesa kama umesema ni ya investment, wacha iende kwa investment na uisahau.
In Kiswahili there is a saying, akiba haiozi. What we are basically doing is facilitating and helping Kenyans to save for that time in life when they may not have the ability to run as fast as they can do now.
I would also want to tell them that it is important that they put together all the documentation which they need to refer to or to use in their matters before them. And also the fact that they don't need to have a lawyer to represent them when they come to the tribunal. We have the office of the clerk of the tribunal who is able to guide them.
I urge all Kenyans who are saving to also attend to attend AGMs, because in AGMs they will be given a lot of detail about how their money is, how they will access their pension when they leave retirement, how the payments will be made, so that that money is paid to the correct person. Lastly, I urge Kenyans also to pay attention to the fact that when they get a lump sum when they retire, there are usually temptations. Most people who retire with a lump sum, sometimes they end up being careless. They start building very huge homes which they cannot live because children are going, children have gone, and you still want a 5-bedroom house. For who?
To the youth who are joining the employment market now, I'll tell you, save. Start now. Don't wait for a bigger or better job. Start saving now. And if the employer that you get does not have a retirement scheme, join an individual pension plan.
Retirement Benefits Authority, let's continue doing what we've been asked to do. I think we need to continue to instill confidence in the public so that they can really be able to save more. They can be able to put in additional voluntary contributions. Let's work hard, innovate, let's continue to bring in as many products as possible to assist us reach out to as many people out there who are not saving towards retirement.
It's been a journey, and I believe we've done very well, and we have an opportunity to even do better. Well, the only thing I would say to the authority, besides congratulating, probably just let us just try and emulate the guys in the West. I think within Africa we're doing very well, and even out there, but I think we can do better.
I'll congratulate RBA because we have been accepted as a regulator and we've seen the industry grow. Of course, this is not just the regulator's role. You can come in as a regulator, and if you're not accepted, then people will, only the few existing schemes will be there, a little money will be coming. The fact that it's grown so much, it means that it's been accepted.
A message to the industry players, I think they need to support the initiatives of RBA because the public are looking at the institution, and the public are all looking forward to the funding, what is there in place. And I would also like most industry players to encourage the membership to contribute slightly more than what they are doing, because when they retire, as I said, the amount for which they're getting as a pension is very little.
The key message I will pass to the RBA is, first of all, congratulations on 20 years. I believe that as the RBA, it has shown itself to be a progressive, a fairly competent, and a responsive regulator. Indeed, I would like to say that the people in the RBA that we interact with are very much like in the private sector, results-oriented, response-oriented, and that's been great. We would urge them to continue with this and look forward to the accomplishments in the next 20 years.
For me, it has been a great 20 years. I've seen a lot of exciting stuff, not just in RBA, but also in the industry and in the financial sector as a whole. And I really just want to say that now that I'm also coming towards my own retirement, I really want to wish the RBA community to continue to grow and to have more successes in the future. Thanks.